accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people. Good morning, welcome back from a very long weekend. Hope you had a great one. This is Bloomberg Quint Live, India's first live streaming business news service, and I'm Menaka Doshi.
And you're watching Indian Open. I'm Neeraj Shah. Good morning, Menka. Good morning, Ira.
Good morning, everybody. And these are our headlines this Monday morning. Shinzo Abe set to become Japan's longest-serving prime minister in the post-war era after his election gamble pays off. The yen weakens and Nikkei trades higher. Hindustan Zinc and India Bulls Housing Finance are the two nifty companies that will report earnings today. And India's oldest and largest power exchange is set to debut on the bourses this morning.
Well, let's take a look at the trade setup for the day. Asia's trading higher. Now, we've had a truncated week for Indian markets. So if you take into account all that the rest of the world has done and how we close even in Thursday's session versus what the SGX is indicating, we'll start off on a slightly higher note. But good handover from the US markets. Nikkei especially is trading higher after the verdict, or the word has started to trickle in and almost certain that Prime Minister Shinzo Abe will continue in Japan as the majority leader, and that has pushed the Nikkei higher. But just look at what it's done to the rest of the Asian markets. The handover from the US markets positive. So the SGX Nifty indicating, if you look at today's trade, you will probably think about 13 odd points, but net it's about a 40-45 point odd upside that the SGX Nifty is indicating. So we'll start off on a good note. Well, maybe that was needed after the kind of session that we had in the truncated Diwali Muhurat trading session as well, wherein we fell on fairly high volatility. I think that was the key trend. The trend weakened the last 3 or 4 sessions. We probably needed a bit of a boost. We might get a bit of a boost today. But remember, volatility shot up 7.5% in a 1-hour trade marked by extremely low volumes. That just spoke about the kind of nervousness that is there in the Indian markets. Now, if we ever needed the Nifty Bank to perform, it is this week, because the last 3 or 4 sessions have shown one thing, or the last 6 sessions have shown one thing. Irrespective of what Reliance does, irrespective of what the other telcos do, if the Bank Nifty or the Nifty Bank is not participating, it's becoming very, very difficult for the Nifty by and large to move up as well. So that is the key. The Bank Nifty is the key pivot this week, and it could well be dominated by fundamental news this week, because if you look at what's to be watched for this week or the next 15 odd days, I think banking results dominate. This week itself, Kotak Bank, HDFC Bank, Yes Bank, all 3 numbers, and I would probably presume that Kotak and HDFC Bank would come out with probably at par kind of numbers. Yes Bank would be a very, very interesting number to watch out for after what Axis Bank has done. I think commentary from companies like Asian Paints and HUL, as well as their delivery, could be very, very interesting. HUL has come out with some commentary on volume growth over the weekend too. I think what they speak or what they deliver in terms of this quarter and what they speak about the next quarters, Asian Paints as well in particular, could be very, very interesting with regards to what happens to the consumption space. And 3 large IPOs, 2 large insurance IPOs, 1 AMC IPO to hit the bourses over the course of the next 15 days. And all of these are large IPOs, so it'll be very, very interesting to see if it has any kind of impact on the secondary market liquidity or not. In terms of stocks to watch, I think I marked 2 or 3, aside of course, telcos and Reliance and cement and all of that. I think 3 stocks, 3 newsmakers per se. One of them is Dr. Reddy's. It's a sentimental boost that has come in. Let's wait and watch if indeed there is a bit of an uptick into this one. Valuation-wise, it's trading very, very well. So let's wait and watch if indeed there is some bit of a sentimental uptick that comes into Dr. Reddy's. And if there is a sentimental downtick that comes in on Bajaj Auto after the news coming in from Sri Lanka about auto rickshaws, it's not a very large contributor to Bajaj Auto's top line. But for a stock that has been doing really, really well and has not received too many bad news, let's see if this one has the ability to bring the stock down a little bit, even if it is for short term. And Gujarat Fluorochem could be interesting. The United States has started anti-dumping probe against PTFE resin from India, and Gujarat Fluorochem is the producer of that resin in India. Could be interesting to see if this one, which finally started to see some, return to sanity in terms of the valuations, because it traded at substantially lower valuations despite having extremely good top line. The market started recognizing it. This might just put a spanner in the wheels. So let's wait and watch if Gujarat Fluorochem reacts in the session today. And then, of course, there is this whole cement reaction, though we did see a part of it playing out in the Diwali Muhurat trading session itself with Ultratech and some of the others correcting.
We have two big numbers out now, right?
Yeah.
ACC and Ultratech.
Yeah, and Ambuja coming out this week. So it'll be interesting. But we'll talk about cement in a bit.
I thought the most interesting thing over the week or the last Thursday, Friday, Saturday, Sunday was the HUL commentary that you referred to, where they said that this was in an analyst meet that Unilever held, where they said volumes have not returned to normal as yet in India. And then you contrast that with Hero's sales, 3 lakh vehicles on the day of Dhanteras, record-breaking sales for that two-wheeler company. And you've got to wonder, is there a big shift in demand? Are we seeing it come back very, very slowly, and therefore Unilever's comments are more cautious as opposed to, what the sales there.
Urban, right?
Or rural, rural versus urban, in that sense.
And durables.
It could be
durables versus non-durables.
Yeah, so it'll be interesting to see where that Hero number came from and the spread of it. And we'll be talking about it through the course of the show this morning to try and get you some more insights. But on First Word today, here's what we picked for you as editorial key takeaways for the rest of the trading day. National Aluminium, or NALCO, was forced to shut down one of its plants over the weekend after it ran out of coal. So is the black gold really in short supply, or is it just another instance of supply mismanagement? The cement sector, as Neeraj mentioned, may not be out of the woods just yet, with costs escalating for two of the country's largest cement makers, ACC and Ultratech Cement. Why then are brokerages so upbeat? And what should one make of the Revenue Secretary Hasmukh Adhia's comments asking for a relook at GST tax rates 4 months into the new indirect tax regime coming into effect? We're going to examine all of that over the next few minutes. Here, you want to kick it off with that NALCO plant shut down on the back of a coal shortage?
So that news came in over the weekend, and of course it raised questions about what's happening on the coal side. And it prompted us to look through the data to try and understand, is this really a coal shortage? Is this a Coal India problem? Coal India often becomes the whipping boy in these kind of cases, or is there something else going on? So you can look at the data from various viewpoints. You get it from various sources. So one, you can look at the core sector data. If you look at the core sector data, you do get a sense that there is a gap between the pace of growth, and just hold that graphic, pace of growth on electricity generation and coal output. You can see those numbers on your screen. Clearly, electricity generation has been growing at a faster clip than coal output. But remember, electricity generation now in the revamped IIP and core sector data also includes renewables, and renewables is no longer a very small part of electricity generation. So electricity generation includes thermal, it includes hydro, it includes nuclear, and now it includes renewables. So all of that combined is growing at a faster pace than coal output. So just looking at those two data points, you can't conclude that coal output has been growing at a slower clip, and hence there is a coal shortage. Come to the second data point. There has been a shortfall in the targeted hydropower and the nuclear power production. That is data coming in from the CEA. So there is some shift in demand from hydro and nuclear towards thermal. So there is a possibility that thermal power output is growing a little bit faster than what Coal India would have budgeted for, and hence there is some shortfall coming in the coal availability out there. But if you look at Coal India's numbers per se, and Coal India on their website very clearly give you their annual targets, both comparable and full year, and that tells you that while there is a shortfall, there isn't a very dramatic shortfall. So I think their targeted numbers for the April to September period were about 243.3 million tons. They've done about 231.87. Yes, the year-on-year growth is 0.8%, but year-on-year growth includes base effect, etc. If you look at the offtake numbers, again between the target and the offtake, there is a slight shortfall. So I don't think the problem is in terms of Coal India producing far less coal than what they were expected to produce. There is some shift in demand from other sources of power into thermal, which means that there is some shortfall coming in. And then the second aspect, most certainly from the numbers and from the commentary that is coming in, seems to be a little bit of inventory mismanagement. In fact, just as this whole conversation started up, you did see coal ministry officials go out there and give interviews and talk about the fact that a lot of these power companies companies have been keeping inventories at minimum levels. There is a CEA, suggested level of coal inventories, and it seems they have not been maintaining those levels. So Coal India stocks stood at about 7.2 million tons as on October 19th. This is again CEA data. According to the Hindu Business Line, this is a 25-year low. But on the back of that 25-year low, you had the Power Secretary telling Economic Times that power plants are deliberately holding stocks below CEA norms, and the reason for this is cost management and trying to make sure that they don't spend too much on inventories. So it seems like it's a bit of both, a little bit of shortage because demand is shifted towards thermal, and a little bit of inventory mismanagement.
You know, what about demand has increased? Remember, we were talking in September about increased numbers, demand numbers coming in for the month of August, substantially higher, though the base from last year was quite low. Substantially higher than the previous few months. So I think, if I remember the data correctly, we've seen 2 months of higher than expected electricity demand, right?
Yeah, August was particularly strong, but I think people sort of explained that away, saying it's restocking, so additional shifts, etc., happening at some of the factories. We'll know once we get other numbers, September, October, to see whether that's
But this is bad. It's not just NALCO. Business Standard reported about a week ago that there was a 40% cut when it comes to both the utilities, the utilities in 2 states, Rajasthan and Maharashtra, a generation cut because they've just run out of coal.
But that's, so if you look through the, and the CEA website gives you plant-wise data, there are some plants which are running with 3 days inventory of coal. How is that possible? I mean, and then this always happens, right? As soon as you come to a situation like this, everybody starts to import. You have to hold coal up to a certain amount of time. There could be, exigencies like, say, off-season rainfall, which impacts output in one particular month. How can you run your plants with 3 days worth of inventory of coal?
I don't know, but there are now reports of rolling blackouts even in a state like Maharashtra, which hasn't seen that in a while now.
But I have to say that if you look at the aggregate numbers, the peak demand versus the deficit, the numbers are not that stark at all. There's some minor deficit, at least for the month of September, but in terms of peak demand and output, so the deficits are not very large.
So it's just, how would you say it? Unbalanced
There seems to be some balancing
demand-supply situations, which has been the case for a while now, which we're hoping the national grid will solve. But anyways, that's the coal story. We'll be watching that very closely. Hopefully, we'll also get some more input from across the power industry to see how bad things are through the course of the day.
Yeah, so that, but speaking of cost pressures, guys, I thought it was important to point out that while everybody, all and sundry are bullish on the cement pack, I thought the standout features out of cement, we're just moving topics here, and the standout feature in either the ACC numbers or the Ultratech con call in particular was the reference to cost increases in a big way. So I just compiled some set of data points, and then of course we'll talk about the valuation concerns or the valuation picture as well. But ACC, if you scan through their results, EBITDA per ton, while YOI was strong, on a quarter-on-quarter basis was down 22%. And this was predominantly because of higher slag prices, fuel costs due to petcoke, and higher freight costs. Now, ACC was actually a strong number. Ultratech probably not as strong as ACC, but a decent set of numbers. But if you look at the con call that they did, there were innumerable references to cost increases. So Ultratech in the con call said cost of sand has gone up by 5 times because sand availability is an issue. Petcoke prices rising, hovering around $105 per dollar, which was from the con call commentary a negative. And diesel prices up 7% on a YOY basis, which is leading to freight cost increases for them as well. So if the 2 large players, and we'll be watching out for the Ambuja commentary as well coming out, I would doubt that it is very, very different. If 2 large players are talking about cost increases being a big problem, then you got to assume that maybe EBITDA or EBITDA margins over the course of the next couple of quarters could be under question, unless what the brokerage industry is factoring in turns out to be true. Now, if you look at all the brokerage notes that have come in, the target prices for Ultratech, I've just used Ultratech as a benchmark example. Almost every brokerage, save for HSBC, I think, has gone ahead and said that they are very, very bullish and optimistic on what the results of Ultratech and even ACC board for the sector, because all of them are laying bet on one thing, that the capacity addition has been so low that eventually, while valuations will stay elevated, and we'll talk about the valuations as well, that while valuations may stay elevated and costs may go up, the revenue uptick will take care of all of these problems for Ultratech, for ACC, and for the industry. I think it will be very, very important to see in terms of the way ahead, one, whether Ultratech's forecast about single-digit volume growth for the industry turns out to be true, or whether the regional players come out and say that, hey, there might be a problem for certain pan-India players, but on a regional basis in South India, in West India, etc., the volume growth doesn't seem to be a concern. I think commentary from Sanghi, from JK, from Shree Cement, and from the two southern players, India Cement as well as Ramco Cements, would be very, very crucial. And in terms of stock price reactions, if at all some valuation concerns might see the stocks correct a bit, but if you just look at what the mood that the market is in, we were talking about the Diwali commentary, Menka and Ira, almost everybody who came on the channel, at least 3 out of the 4 guests, if they didn't speak out names, they mentioned that cement was that one pocket that they were betting on in a big way. Again, the reasons remain the same, that while valuations are expensive, they believe that because of lack of capacity addition, the growth numbers will be very, very strong. Going ahead.
You know, there was a Macquarie report out this morning, very bullish on cement for exactly the reason you mentioned. One line struck me. They said for the first time in the past 11 years, incremental cement demand should overtake incremental capacity addition in FY18. And I mean, that I think sort of tells the story in, you know, some few quick words as to why brokerages are so bullish, even though we're going to see input prices or raw material prices possibly increase over the next few months. I mean, look at Brent crude, it's at 58, right? Showing no signs of easing off at this point in time. So it doesn't look like crude prices are going to go down much further. Not at this point, at least. So interesting to see what happens with cement. I might have some good news for cement.
Which is?
From GST,
Okay, no, but just before, sorry, so just before you move on to that, I just wanted to mark one thing, Menka, and this is the first time that, so I started my career as a cement analyst. The first time that I'm seeing people turning bullish or staying bullish on the pocket despite valuations being so high. And just a brief Bloomberg chart of what the P is. I'm not using EV per ton. It's slightly more complex to show on as a chart form. I'm just looking price to earnings multiples of 3 cement players which I thought have been the dominant names, ACC, Ultratech and Shree Cement, predominantly because it's been the big wealth creator. Even the volumes on the counter have been a bit thin. But that's the price to earnings trend for cement. And if you look at this trend, you would argue that, hey, if we look at what the current P multiples are, or the P trend is, it is probably not as expensive as what the stocks have been about a quarter ago. And that may be true because there was a brief correction. But if you just look at the last 2 months, cement stocks have been on an upsurge. And quite frankly, while the results in Q2 have been strong enough, the references to cost increase and thereby near-term pressures on earnings could well result in a bit of a pullback before the upsurge continues. I'm just using upsurge as a term out here because almost anybody, whether on the buy side or the sell side that you speak to, is bullish on the pocket. If everybody's in the same side of the road, I know the common saying is that people are probably on the wrong side of the road, but hey, everybody seems to be wanting to buy cement, so you never know.
Well, we'll find out if Neeraj's caution is well justified. Later on in the show today, we are going to be speaking with Dhananjay Sinha of MK Global. He's going to talk us through what his outlook on cement is. So we'll get you one more expert point of view besides the long-standing cement analyst we have in the studio today. Like I pointed out, I might have some good news for cement. Actually, it's not me. It's the Revenue Secretary, Hasmukh Adhia, who last evening in a PTI report was quoted as saying that there is the need for a complete overhaul of GST rates. I don't think he even said GST rates in that article. He just said a need for a complete overhaul of GST, which raised several eyebrows, set social media on fire, saying, hey, what's this? 3-4 months into the implementation of this new tax, you're already talking of an overhaul. How could you have got it so wrong, etc., etc. Anyways, late night we were told that the article by PTI has been revised. Mr. Adhia's comments were actually not exactly that. He did not suggest a complete overhaul. So we'll pull up the revised quote and put it up on your screen. What he did say was there is need for some rejig in rates. Okay, and that he said that in some cases, some items in the same chapter, this is the chapter that lays out the HSN codes, too complex to explain it this morning, but effectively these are the codes that, the tax codes that apply to certain categories of items. And he said there are in cases some items in the same chapter that have different rates applicable to them, which might lead to confusion, litigation, etc., etc. And so therefore it needs to be harmonized. It's also very difficult to interpret for small and medium-sized businesses. They're the ones suffering the most in this transition. So we need to bring all of this, to some sort of better conclusion, thereby leading to better compliance. That's what his quote played, if we can flash it. And that's the revised quote that came up. The original one suggested that there was going to be complete overhauling, which is what's prompted this entire conversation this morning. What does he mean? Or if he did mean a complete overhauling in the first instance, or if there is the need for complete overhauling, what would it require, right? Now, these are the changes we've already made in GST, which are fairly significant changes. So firstly, we changed the filing for small businesses with a revenue of 1.5 crore and below to quarterly filing, including quarterly payment of tax. That was fairly big and a big relief for small businesses. The composition scheme ceiling has been raised to 1 crore. Rates on almost 100 items since the month of June have been revised and revised downward, which is good news. The reverse charge mechanism has been temporarily suspended. Don't know whether it'll come back, but as of now, it's only suspended till March 1st. And there has been temporary relief offered for exporters. Again, this is temporary, but these are the key changes that have taken place in the last 2 months as the government has sought to course correct, mostly to provide relief to small businesses. What are the big changes they need to make? Now, the first one, and I spoke to a bunch of analysts last evening, all of them agree, is that they need to review the number of items in the 28% slab. That is the highest slab. If you don't count the slab which is above that, which is 28% plus cess, right, which is where all your luxury cars, etc. comes in. What all do you have in 28% that is struggling right now? Cement's in 28%, furniture is in 28%, refrigerators and air conditioners apparently are in 28%, construction equipment is in 28%. Why even chocolate is in 28%?
Restaurants are in 20%.
No,
air-conditioned restaurants.
Not 28, 18.
Air-conditioned restaurants are
18.
on a higher slab, and they were
18.
18 to 12 is
and
what they wanted to bring it
18,
down.
not 28. So, but so lots of items. 14% of overall items are in the 28% slab. Is what experts tell me. Now, this was originally, if you remember Arvind Subramaniam's document from 2015, was supposed to be the slab for sin goods. So a select few luxury items that could afford to be taxed at that level. Somehow it has gotten expanded to include many more goods. Many state finance ministers also agree that there needs to be a review and rates need to come down in that slab. Hasmukh Adhia himself, and we can pull up that quote where he suggested that a 28% slab needs review. This is what he said in a conversation on CNBC TV 18. So I think 28% will get reviewed. That's the confidence level across all experts. The second thing, as I've already pointed out in his original quote, harmonized rates on items in the same chapter. Mr. Adhia spoke of that in his revised quote. I've explained that, so we won't go into that in more detail. Fewer slabs. This is something that many experts are hopeful of. 12 and 18 gets collapsed into 15 maybe. 28 comes down to 25 maybe. You have only then 3 or 4, which is 0, 5, 15 and 25. That's the hope. But I don't think that's going to happen anytime soon. If you heard Arun Jaitley in the beginning of this month, he said, hey, we'd love to be able to revise slabs. I'm paraphrasing him here. The exact quote will show up on your screen. But we can't do that unless we're assured of revenue neutrality. And as yet, we have no confidence of revenue neutrality. The government seems to feel a bit confident, but none of the numbers suggest that as yet because it's too early in the collection system, right? In fact, if you saw the last filing numbers that happened last week, which is the GSTR 3B form this is October, so it would have been for September. We had 55.68 lakh filings for GSTR 3B for the month of July, 50 lakh filings for GSTR 3B for the month of August, and 37 lakh filings for GSTR 3B for the month of September. Now, this could be because many small businesses are now in quarterly filing. We don't know. It's just the point is that it's too early in the numbers game to get any sense of the total filings, though they are low, one can surely say that, or the total amount of revenue collection. So no slab revisions most people expect till the revenue collection bit is sorted out, and we'll only know that, let's say, November, December from the government point of view. That's really, really very important. The other two big changes that most people expect are easier compliance for small businesses, reduce the number of forms if possible, make the data fields simpler. If you've seen any of the forms, you know what I'm talking about. And finally, this debate that's been going on for now a few weeks, include real estate and petroleum products in GST. Now, most experts tell me there's a fairly good chance of real estate coming in. We know that might come up in the next GST Council meeting, which is in the first week of November. Petroleum products, and most of the tax experts I spoke to said, hey, look, that might take some more time. So real estate might, in fact, be on the list faster than petroleum products. So if indeed not a full overhaul but a semi-overhaul was needed, these were the things that needed to get fixed. And they're all hopeful that the government will pick up all of this, because government itself and the GST Council itself has mentioned this at various points in time. So these are some of the changes we can take a look at over the next 3 to 5 months.
I think the couple of things that, the chatter that was going on within the economist fraternity, one, when they see all of this, they tend to get even more nervous about what the revenue projections are going to look like.
Yeah.
And the other thing that a lot of people are now talking about is, it's strange that it's being called unforeseen, but the impact on the informal sector. I think more and more people are worrying that this impact on the informal sector is something that's going to come back through demand, and you perhaps did not have a good fix on how badly the informal sector will get hurt. I mean, you already started to see it come back through rural demand. There is no other way to explain the weakness in rural demand. And if they keep talking about SMEs, right? That is the informal sector. And if those people are starting to, I don't know how many are starting to shut shop or not, but if they are feeling the pinch and if their transition from informal to formal is tough, there is going to be an impact.
Look, I don't want to defend this in any fashion, because I can understand the pain that the economy is going through, especially the small guys. But you've got to admit that that's what GST was anyways going to set out to do, right?
No,
the fact is, so many of them were functioning outside the tax net.
No, absolutely.
If you want to do any serious expansion of your tax net, stabilize government revenue over decades, and stop putting the
100%.
burden on just the salaried class, then this is possibly the only way to do it.
100%, but like easier compliance, easier forms, perhaps a longer...
Yeah, I agree, 100%.
All of that,
Easier compliance. I was asking, tax experts. So you're filing, 3 forms a month, 36 forms a year, which is onerous for many small businesses. We've been talking to many small businesses, and they're all of the view that something needs to be done to simplify this. The quarterly filing system, will have helped many. Possibly. So we'll see how much more improvement they're able to make. But I think some amount of, unfortunately, how do I put it without sounding cruel? Some small businesses will undoubtedly go out of business if their only advantage was a tax competitiveness that was born out of not paying taxes, or a price competitiveness that was born out of not paying taxes, right? And I think we had all envisaged that that's what GST would do, hopefully. Yeah. Let's see.
Well, fingers crossed for all of this and more. I could have actually extended first word a little bit by asking both of you, what do you thought? Very quick words on the Jio price increase as well, because it might give room to the incumbents to maybe raise some prices as well. We've been talking about how 3 players and what does it do to the industry and the pricing.
Yeah, so the brokerages all seem to suggest that, right?
Yeah.
That it's going to be good news for all this suggests price stabilization in the market after them. I find it tough to believe that they're happy with acquiring just these many subscribers, and that they're not going to, sort of use any more pricing strategy to gain more revenue market share or market share in terms of number of subscribers. So I find it surprising. But I've got to say, I don't know if this is age. I can barely understand most of the schemes anymore. They're so bloody complex.
Yeah, true.
Yeah.
But anyway,
he has sort of chosen to stay out of the conversation altogether. So I don't think she's looked at the scheme in detail, because it's so dense.
it is.
Yeah.
Yeah, but well, let's wait and watch if indeed that has some impact on the telecom stocks. If we haven't seen impact already, the best performing space in the last fortnight at least, if not.
You think that Jio is going to give up the fight for revenue market share at this point?
No, I confess ignorance to everything that Reliance does. You never know what Reliance will do next.
That's so true.
So let's wait and watch. But in today's session, at least, we might have some uptake for the telcos. But any case, that's a discussion that we'll have a bit later on the show as well. For now, that's all that we have on First Word, at least, for today. Yeah, but a bit later on in the show, do stay tuned to Bloomberg Quint. Of course, we'll discuss the possible triggers for Indian markets with Andrew Holland of Avendus Capital. We'll talk about Diwali sales that Menka was referring to with Vinkesh Gulati of United Automobiles, and look at the rising demand for manganese with the government's electric vehicle push. UR Acharya of Sandur Manganese will join us on the show. And of course, a bit later on, Dhananjay Sinha of MK will talk about cement demand and pressures. But full tilt towards the day's trade today. Let's take a look at what's happening within the derivative space. Navneet is standing by with the FNO setup for the morning. Navneet, good morning.
Hi Neeraj, good morning. Well, clearly the moderate trading session was not so good and we did see some negative cues coming about. If you look at the Nifty futures, the open interest went down and the discount also actually, if you look at the futures, they almost closed very flat to the spot Nifty in a moderate trading session. Bank Nifty was the one where fresh short build-up was seen. As you can see, the open interest there was up almost 3%. But clearly what will be in focus in today's session will once again be the volatility index. Despite of being a 1 hour session, you did see India volatility index surging by almost 7.5%. Even if you look at the put call ratio for Nifty, that declined to levels of 1.51. The Bank Nifty put call ratio increased to about 0.93. If you could just pull up the active strikes, that will tell you clearly why the PCR for Nifty went down. There was a lot of call riding seen for strikes like 10,100 and also the 10,200 saw a surge of almost 11 lakh shares, and some unwinding was seen by the put riders for the 10,200 where open interest was down nearly 10.5 lakh shares. Even if you look at the open interest concentration so far, the range remains 10,000 on the downside to about 10,200 on the upside. In terms of FI setup, well, nothing has changed, but still, if you look at the positioning on the index futures, we started this series with 56% net long position. That number has gone up to almost 65%. In terms of the options data as well, they've written more of puts and also they've written more of calls. So they're clearly hedged on the option side as well. In terms of active stock futures, you guys were chatting about the telecom stocks. Well, clearly Bharti as well as Idea have been the outperformers this month, and we did see some fresh long position being built up for Bharti Airtel, where the open interest rose, and similar was the case for Idea, Neeraj.
Okay. Thanks a lot for that, Navneet. So that's complete FNO setup for the day. We'll talk about Idea and the telcos in a bit, actually right now with Abhijit Pathak as well. He's director at Definet Solutions, joins us right now on the show. Abhijit, good morning. Thanks so much for joining in. What do you make of what the markets could do early this week? We'll start off on a good note as the SGX is indicating, but if the last 3 or 4 days have been any indication, there is some inherent weakness in this uptrend.
Yeah, this weakness is only near the resistance at 10,250, which I had been talking about for the last 1 week. So whenever it goes near that, now that has come down to 10,200, 10,210. So most probably, if it gaps up to that level, there will be it might come down again. But at the same time, there is a lot of support at 10,080 and 10,100. So I don't think that being broken this expiry, and the level to watch out for is about 100 to 110 on the 10,200 put. If that is not crossed, Nifty can remain in this range of 10, 100 and 10 to 250 for the next couple of days.
Okay, so I'm looking at your call on the Nifty futures, Abhijit. You were can you explain that strategy with the stop loss that you've given?
Yeah, on the Motor trading day, the high was 10,211. So as long as that is not crossed and the gap up and there is a short covering over the first 10-15 minutes today, because a lot of people might have gone short in the last 15 minutes on the Motor trading. So that might act as a resistance. So it might be a good trade to go short at those levels near 10,200 on the futures with a stop loss of 10,220 to 225. And maybe it can decline for the next couple of hours. I don't know till where, but maybe 10,150, 10,140.
Okay, so go short on the Nifty futures, Abhijit, if I'm not wrong, is what you're recommending at a level of 10,200. Am I correct?
Yes.
Okay, so that is the one strategy on the index. Now, what about specific stocks, Abhijit? I believe Sun TV is something that you've been speaking about for the last couple of sessions, if I'm not wrong.
Yeah, Sun TV is looking good as long as it doesn't close below 800. So, in fact, it touched 800 on the Motor trading day. Problem is today a lot of stocks will open gap up. So, getting an entry in a long might be a bit dicey. So, if it is available near 800 or 805, one can go long with a stop loss of 795, but not somewhere in between, because then the stop loss becomes quite far off, because the target is about 815, 820.
Abhijit, I just had one small question. Aside of the strategies that you've given on telecom, with what Reliance has done and the kind of upsurge that we've seen in Reliance as well as the other telcos, what does one do this morning? Idea, Bharti, or for that matter, Reliance Industries itself?
I don't think any fresh longs should be built at these levels for two reasons. One is they have run up quite a lot, and secondly, most importantly, expiry. This is expiry week now, so the call writers, I mean, whoever is left, the smart money, they might not allow it to go further. So this in fact, 920 Reliance I had talked about even just after the results. So that level has come now. So as long as it doesn't cost 920, I don't see major upside in Reliance, at least for this expiry. Same way for Bharati, 480, 490 levels. So I wouldn't go fresh long in these two stocks immediately. There should be a pullback.
Okay. Abhijit, many thanks for joining us today and giving us that perspective. So that's the view from Abhijit Pathak on specific stocks. Do watch out. I think interesting. He's recommending not initiating any fresh longs in the telcos. Sun TV is something where he has a call, and Nifty futures at higher levels, he's recommending viewers to maybe start taking some short positions. A quick check on how the Asian markets are faring at this point before we move any further and get in our guests as well. We have a tick of green, at least in the Nikkei. So that market seems to be doing okay. The handover from the US markets was positive. And if you just look at the SGX Nifty levels, don't look at the percentage uptick, but if you look at point to point, the difference in levels, we'll probably have a start about 30, 35 odd points in the green. So we'll start off well. Let's wait and watch what do we do post that. A very critical part of what do we do post that would be what happens to private banks and State Bank of India, and thereby the Bank Nifty. So that is something that we definitely need to watch out for. However, in an attempt to get you the best opinion and the whole opinion from across the street, we try and get you some updates that have come in from across the brokerage world. CLSA has come up with a strategy note on India when it is betting on large cap laggards. That's an interesting strategy. The House does not see any big recovery for the IT sector over the next year. Darshan, what are the salient details of this report?
Neeraj, what they did was they analyzed the BSE 200 companies, and what they're saying is the fact that now they see the laggards on the Nifty as well as laggards of the BSE 200 as well as relative value stocks now outperforming in India. What they say that they believe that the earnings recovery growth will sustain in some of these larger companies, some of these laggards which have happened. And finally, they see that the trend for pharma has improved, but that's not the case as far as the IT sector is concerned. They have seen positive changes that are coming in large cap laggards, exporters and relative value stocks. Negative change is seen in all these expensive value stocks. Apart from it, the domestic deep cyclicals, which actually includes the capital goods space as well as mid caps. Now, what are their top picks? M&M is their top picks because they believe that the recovery in rural play is something that will come out. So they are rather bullish on M&M at this point of time. Z Entertainment, they believe that the September quarter will be the bottom in terms of earning. They believe the worst will be over. ICICI, they believe that the asset quality issues are nearing an end, and that is why they prefer ICICI Bank. Cement stocks, ACC and Ambuja, they have more focus on because of two reasons: that the parent Holcim is paying a lot of attention to them in terms of their restructuring and the pending merger that will come in. ITC is the cheapest FMCG stock according to them, and that is something that deserves a buy. DRL and Rupin, they are confident of earning trend reversal that will come in. IT, HCL Tech is their top pick. And finally, the entire bullish on the entire property sector because they are of the belief that the housing cycle is set for a cyclical uptrend at this point of time.
Darshan, I'm throwing this out of the dark at you. I don't know if you have the answer to this, but unless I'm very wrong, CLSA has been that one brokerage house that has been bullish on housing, property and real estate for some time now.
Yeah, they have been, and they have been saying this the same thing that they believe that housing is in a cyclical uptrend. Most of the stocks, I believe, they have a positive view on. So individually stocks, yes, they are bullish on, but as a sector, real estate is one of the sectors they are most bullish on.
Okay, many thanks for that, Darshan. So that's an interesting analysis of what CLSA is saying in their strategy note. One, of course, aside of what they've said on Ultratech in a separate note today, I think they are pretty bullish on laggards, large cap laggards in a big way. They're bullish on M&M on the rural recovery play. They're bullish on ICICI Bank. They're saying that the asset quality issues are nearing an end. And interestingly, Ambuja and ACC due to the Holcim focus and merger. So those are those few names that CLSA believes they're bullish on. I'm particularly interested in property. I know I've been sounding like a broken record the last few days speaking about how some of the real estate stocks could do. But just look at the kind of moves that we've seen in a bunch of these names, including Oberoi, including small caps like Marathon, NextGen and some others. I think there is some reason to believe that people are finally turning bullish on this space. So do watch out for these names in the session today, as also over the course of the next few days. Before we get in our research team members on the key stocks to watch out for in today's session, since Mukesh Singh is with us, he's head of technical analysis at Neela Financial Services. Let me just get in a quick perspective from him. Mukesh, brokerages by and large still remaining bullish. We just spoke to Abhijit a while back and he recommended it might not be a good idea to take some long positions on the Nifty. If at all, at a higher level, go out and short. What would your Nifty strategy be for the day?
Good morning, Neeraj. Actually, this Nifty area of 10,250, 10,280 seems to be a bit of a tough nut to crack for the markets. And the problem is not with the Nifty per se, it's the other broader indices like BSE 500, BSE 200, which are showing a formation of an expanding diagonal pattern in Elliott waves. Though it's a very rare pattern, and but the interpretation of the same means that we might be in the closing stages of this entire run-up from the low of 7,900, which we saw in post demonetization. So there is a problem with these broader indices, which is getting translated into key benchmarks like even Sensex or Nifty. So I think it would not be such a bad idea to book some profits in this particular zone around 10,200, 10,240 kind of thing. And only once Nifty starts sustaining above 10,300 that one can have a fresh look at long positions. Otherwise, as I said, it's the broader indices which are exerting some downtrend, which can exert some downtrend pressure in the overall market in the coming days.
Okay, Mukesh, many thanks for that Nifty strategy. But that's not all. I think the bunch of stocks which are in news today, starting, of course, with Indiabulls Housing Finance and the results that are going to come out today, as also Havells and Hindustan Zinc. But more importantly, Dr. Reddy's could be a stock that could be in focus as well. So our research team is waiting by full strength to talk about all of these result previews, because all of these will be the focus point of the trading day today. So do watch out for these, as also the news bit on Dr. Reddy's. It's a sentimental positive, but a positive nevertheless. So let's start off with actually the newsmaker, and that is Dr. Reddy's. And Darshan, why would Dr. Reddy's be the focal point today?
See, because there was this patent that was there which was invalid. Now the court, the US appeals court has made that patent valid. So initially the district court of Delaware had ruled that Teva's patent was valid. Now it has been overturned and indicated that the patent of Dr. Reddy is valid. Now what does this decision mean? This decision means that Teva will not be able to launch the generic version of Nuaring post patent. So they won't get the 180-day exclusivity that they believe that could come in. All ANDA filers will be now free to enter the market once the patent expires in April 2018, and that is something that is sentimentally positive for Dr. Reddy. Morgan Stanley has come out with a note, and they say that the target action date, according to the company, was the fourth quarter of 2018. It's a $780 million branded drug and with very, very high margins. For Dr. Reddy, they believe that could generate sales of $120 million in the next 12 months once they launch it, with high PBT margins. But this will come in only if the ANDA approval comes in for the company, and this is assuming 2 to 3 player market, 50% price erosion and 30% market share for Dr. Reddy. So overall, this will be in fact applicable to Dr. Reddy once they get the ANDA approval. But nevertheless, that will happen close to April. But sentimentally, yes, this is a positive for Dr. Reddy.
Okay, so maybe a start in the green for Dr. Reddy's. Do watch out for that. What about some of the others that will come out with results today? Let's start off with Hindustan Zinc.
Good set of earnings that we're expecting from this counter. Yes, margin pressure. If you see on net sales, we're expecting a 58% growth at 5,502 crore as compared to 3,468 in the corresponding quarter. EBITDA, yes, is expected to come at, we are expecting a growth of nearly 44.2% at 2,999 crore in this quarter. But then the margins are expected to contract at 54% as compared to 60% in the corresponding quarter of the previous year. Some kind of cost, production cost is expected to go up, which will have some bearing on the EBITDA margins of the company. But then higher LME zinc prices, both on quarterly as well as a YOY basis, is expected to, have a positive impact in terms of net sales of the company. Now, zinc prices have risen as much as 33% year on year and almost around 15% on sequential basis. Volume growth is expected to be good enough for this company. Higher zinc prices are also expected to aid the realization for this company. PAT is expected to jump up as much as 21% in this quarter. In terms of sales volume growth that we're expecting from zinc business, we are expecting a nearly 28% growth on YOY basis, and a lead, we are expecting a 25% growth there. For silver, we're expecting a nearly 20% growth out there.
Okay, thanks for that, Nikki. What about the maiden Nifty earnings today, Shraddha?
Indiabulls Housing Finance, the earnings trajectory is expected to continue into this quarter as well. They have been posting a good set of numbers in the last few quarters, even after the demonetization bit. A net profit for this quarter is expected to grow at about 19% to 814 crores versus a number of 684 crores last year. As far as the loan book growth is concerned, analysts expected to come in between 27 to 30%. It has been growing in the 25+% range for the last few quarters, and asset quality again expected to remain stable in the June ended quarter. Gross NPAs were at 0.8%, should remain broadly over there. So now remember, the stock is already trading at record high levels, so any sort of a disappointment on the AUM growth levels could probably be taken as a negative. That apart, we're also watching out for of course the growth trend on the back of RERA and the recent slowdown in the home loan growth. Movement in the incremental spreads, especially given the sharp home loan rate cuts, and asset quality trends, especially on their corporate and the LAP portfolios, will be important to watch. That apart, Neeraj, they have also shared last week an update with respect to their investment in Oak North Bank. So some sort of details with respect to the strategy with respect to Oak North Bank will also be watched. But broadly in line, and earnings trajectory to continue.
Okay, earnings trajectory to continue for Indiabulls Housing Finance. Could that be the case for Havells?
It's going to be a mixed quarter, Neeraj, because we're expecting a robust 33% growth on the top line. Margins, however, are expected to contract. And one reason that you can attribute to both these factors, well, the consolidation of the Lloyd's Electric business. So because of the fact that the Lloyd's Electric business is relatively lower margin business on account of the air conditioners, that's the reason why its margins could come off from 14% to as much as 11%. On the other hand, when it comes to consumer electrics, the consumer business and the industrial products, Havells is likely to pass on the raw materials costs which have moved down on account of GST. And that is also the reason why we could see growth on the top line for the industrial products, but there could be some weakness in terms of margins. But essentially, it is going to be Lloyd Electric which will bear down on margins, and because of that, we're also expecting a little bit of a drop in terms of profitability. On the whole, we're expecting a mixed quarter.
Okay, let's wait and watch for all of these names. Thanks a lot, all of you, for joining and giving us that perspective. Okay, it's about time that we get in some stock recommendations as well from Mukesh Singh. But just before we do that, Mukesh, just one quick word on Indiabulls Housing Finance. It's been a rock-solid stock. Assuming that the numbers come in line, what do the charts suggest?
As you rightly said, Neeraj, it's pretty much defying gravity, and as of Diwali Day also, it has recorded a fresh high. Dips around 13, 20, 25 will find eager buyers, eager demand emerging over there. And I think this particular stock has still some more room on the upside around 1450, 1470 kind of area. If one is holding long, then one can have a stock placed below 1320.
Okay. What about your stock recommendations for the day, Mukesh?
Yeah, a couple of stock ideas. The first one is Motherson Sumi. This particular stock has been in this range for last 5 to 6 trading sessions. And in spite of the small kind of panic which we saw in Diwali session, the prices remain resolutely around this 358 mark, 357 kind of area. And with the volatility dipping in this particular stock with respect to the larger volatility measure, I think breakout soon is expected on the upside, and a breakout will be signaled once it starts trading above 358. That would be a buy trigger. Stop then would be stop then should be kept below 349, and on the upside I am expecting a push towards 375 value area. The other stock which I have covered as a buy is Berger Paints. It can be bought around 262. Stop should be placed below 257, and then the upside target is seen around 273 in this particular stock.
Okay, on to our special segment for the day, Bloomberg Edge, and Jayesh Khilnani is joining us to tell us what is it that the terminal is telling us about Reliance Infra. Over to you, Jayesh.
Morning, Neeraj. So it's a buy signal coming in for Reliance Infrastructure based on the stochastic indicator. Now, this is an early buy signal that the stochastic has generated. Let's have a look at how the stochastic actually behaves. So it's it helps you to identify when a price move is overextended, and it measures where the current price is in relation to the recent high or the low that the stock has made. Few conditions before that you have to keep in mind. So anything that is above 80 is overbought and below 20 is oversold. Now, crossover between the two lines that get plotted by the stochastic gives you a buy or a sell signal depending on the direction of the crossover. Let's go back to the chart of Reliance Infrastructure that we have. Now, why this is important is because as of yesterday, as of the last close, which was on the Diwali day, there has been a positive crossover on the stochastic. So the blue line has in fact crossed over the white line, which has given you an early buy signal. Once both of these cross above the green line, that is where your actual buy signal will come in. Neeraj, another important point why this current level is very important, because last time we have seen that the 440 to 450 region has acted as a very good support level, and in the past the stock has actually bounced from those levels. So one can expect that a similar pattern could play out this time as well.
Okay, just one quick word. It might be a bit of a repeat, Jayesh, but the efficacy of this indicator?
Every time the stochastic has given you a buy or a sell signal that has been generated, the potential return would have been in excess of 30%.
30%?
Yep.
You said 30%, Jayesh?
Yes.
If I'm not wrong. Okay. So that's the efficacy of the stochastic for this particular indicator, which is this particular stock, which is Reliance Infrastructure. Mukesh, any thoughts on Reliance Infra?
I'm just checking the chart, and it seems that things have dropped down to multiple support areas of 440, 450 kind of thing, and it can have a kind of a pullback towards 475, 480.
Okay, stay on, gentlemen. So much more to speak about, but it is telecom all the way today. There is news on Reliance Industries, but before that, if you just look at what the stocks have done, I think it's very, very important. Bharti Airtel has been on a spree of sorts. It's acquired 3 companies within the last 1 year, and while it's been able to hold on to its market share, the question mark remains whether it can continue for the future, and whether people by and large are bullish on the stock or no, because the last few quarters Reliance Jio has been breathing down its neck. So what are analysts making of the company? Soumit Sarkar is here with the bull and the bear scenario about Bharti Airtel, and it will be a stock that will be in focus today because of Rel Jio's price hike, but that's the separate discussion, Soumit. Firstly, the bull bear case on Bharti.
So let's first see how competition has impacted Bharti Airtel. Now, if you see the financials of Bharti Airtel in financial year 2017, Airtel's revenue has come down because of competition. In fact, net profit and ARPU has seen a sharp decline. Net profit has has fallen, is halved, while ARPU has fallen from 194 to 154. Now, however, amidst this competition, the company has still been able to maintain its debt position. Its net debt to equity has been in the range of 2.9 levels in the last 3 quarters, and if you see, which is also way below the industry average. Now, as you can see in this chart, it has been in the level of 2.9 in the last 3 quarters. Now, if you see in the last 1 month, even analysts have changed their stance on the stock. Now, in the last 1 month, 51% 60% of the analysts have now a buy rating on the stock from 43% 1 month back. In fact, the hold rating has remained same on the stock at 20%. So let's see what is working for the company. Now, in the ongoing consolidation phase, Bharti Airtel has emerged as a stronger player. It has not only acquired spectrum but also customers from its competitors, and according to analysts, post this consolidation phase, Bharti Airtel is expected to have around 33% subscriber base and 40% revenue market share. Second is the stake in Infratel. Now, selling stake in its tower arm Bharti Infratel would help Airtel fortify its balance sheet by reducing its debt. Now, year to date, Bharti Airtel has sold around 14% stake in Infratel to reduce its debt, and it is expected to sell more going forward. Now, third is that ARPUs might improve after 4 consecutive quarters of decline. Now, Reliance Jio has recently introduced new tariff plans which will be supporting their average revenue per user of 156. Now, this will indirectly benefit Airtel as it will bring in some pricing discipline in the sector. Fourth is their improvement in Africa business. Now, any improvement in their Africa business will be boosting Airtel. In fact, the company has said that they are now looking to make the African business profitable by looking at various options like merger or by selling stake in their non-profitable businesses. Now, last is the spectrum payment. Now, increase in payment period of deferred spectrum liability to 16 years from current 10 years will also ease out some stress on the working capital of the company. Now, if you see on the risk side, now pricing discipline in the sector has not sustained for a very long period. So, if cheaper prices come in, there would be intense competition in the sector, and because of which the company might lose on its high-end subscribers. Now, if competition increases in the sector, the company will have to shell out more money as capital expenditure to sustain that kind of competition and to increase its data capacities. Now, this ongoing consolidation could actually work against the company also, because if the consolidation goes on, then the divestment plan in the tower arm Bharti Infratel could see lower valuations, because consolidation would result into lower requirement of towers. Now, along with high-end subscribers, the company might also lose out on its low-end voice subscribers if Reliance Jio's JioPhone gains traction in the market. So these are the bull and the bear cases of Bharti Airtel, and things that would actually work in favor of Bharti Airtel and things which would not actually work in favor of Bharti Airtel.
Okay, now Samit, I just have a follow-up question. What are people saying about Reliance Jio's price hike? I mean, one, will Reliance Jio give up the price disruption strategy that it has followed for so long so easily? And while we wait for that answer to come about, what does this particular move mean for the incumbents as well? Does it give them more room to increase pricing and therefore better times for the incumbents?
See, now Reliance Jio has hiked tariffs in the last 2 times. They have increased their tariffs. So, which is in this recent tariff revision, they have increased their tariff plans by around 15 to 20%. Now, this doesn't mean that Airtel will also increase its prices, but it actually means that there will be some pricing discipline in the sector now, which would actually benefit this company, Airtel and Idea, because they had to reduce their tariff plans because of free services and the lower tariffs charged by Reliance.
That would mean that Reliance Jio will do away with the strategy that it has done, effected for so long.
Actually, management had indicated this, that in going forward, they will be looking to increase tariff plan, which would support their average revenue per user. And on a Q-on-Q basis, they also said that in Q3, their ARPUs may not fall. So they are going with their new plans of increasing tariffs to sustain the business, I guess.
Okay. Let's wait and watch for that. Thanks a lot for that, Somit. So that's interesting. That's a verdict really on telcos. By the way, I know we've got a few questions. Ankit Upadhyay on Facebook is asking us about the view on Prakash Industries and whether they should buy it at the current price. Ankit, I'll try and hear your question answered. As well as Ram Kumar RS, who is asking about any idea on Balrampur Chini. Now, this is interesting. Balrampur Chini, or the sugar space for that matter, Mr. Ram Kumar, is in an interesting space simply because prices on the global front have moved up. The Indian prices have been okay, and which is why if you look at any of the sugar stocks, the large ones, Balrampur Chini, Bajaj Hindustan, Renuka, or for that matter some of the others, I think they've been stagnant in the last 3 months. Let's pull up the 3-month chart or the 6-month chart of Balrampur Chini, and as you see, flat. Bajaj Hindustan, Renuka Sugars, flat. There's hardly been a move over the last 3 or 6 odd months in any of these three names. Bajaj Hindustan, 6 months. Actually, it's gone down 18%, but it's really a small stock. Similarly for maybe some of the others. So I would presume any expert would come out and tell you that if you have investments in these stocks, might be better to probably look at some of the others. Having said that, Balrampur is a well-managed sugar company, probably one of the best managed large sugar companies in the country. It would probably be dependent on how the sugar prices do in the near to the medium term. But the stocks have virtually not done anything. I think they're a big bull cycle, and that bull cycle has come to a bit of a pause in the last 3 or 6 odd months, except for these stray movements that could be happening in some of the others. But Mukesh, I have no idea about Prakash Industries fundamentally. What about the charts? Prakash Industries, if somebody wants to buy, that's the question that Ankit Upadhyay has. If somebody wants to buy Prakash Industries, is it a good idea?
Neeraj, 10 days back it was quoting at 100, and today it's on Diwali day it has closed at 143. So there seems to be a bit of a momentum. But as I said, this particular thing has run up quite sharply in last couple of weeks. It would be prudent to wait for a decline towards 130, 132 kind of area for initiating fresh longs. And on the higher side, I am expecting a push towards 170. The trend remains strong over here, but it's just the kind of move which we saw in last 10-15 days, which has led to the momentum setups getting extremely overbought. They will relieve their overbought position around 130, 132. So that's the area where one can go long with a stop place below 120.
Okay, so that's the verdict on Prakash. Do keep your questions coming. If you indeed have more questions, we can get our guests to answer some of those questions as well. I think from trade perspective, what would be very, very important, or what would be the stocks that people would really watch out for? One, of course, telcos with Reliance Jio increasing prices. So Reliance, Bharti and Idea could be really interesting stocks to watch out for. I would watch out for Ultratech. The results, post the results, the Diwali truncated session, Ultratech came off a bit. It led some of the other cement stocks to come down a bit as well, with the market moving up today and the slew of brokerage notes that have come out. Let's wait and watch if indeed there is some bit of semblance of some bit of buying that we see in Ultratech in the session today. So that's really interesting. Dr. Reddy's, as we mentioned, could have a day in the sun. So do watch out for Dr. Reddy's. A sentimental positive impact could be an interesting one as well. So those are the stocks to watch out for. But 16 seconds left. Let's pull up the rest of the Asian picture for you. It's a mixed bag. Nikkei is up about 1% after the victory for Shinzo Abe. Our markets indicating a start in the green. Don't look at the percentage gains. I think the point-wise gains will probably have a 25-30 point uptick on the Nifty. We won't have a downtick for sure. So never mind the recent trend. We won't hold on to this 10 point, 15 point downtick. We'll start off in the bit of green. Let's see if we indeed manage to hold on to those levels going ahead in the session today. Reliance should come up on your screen. We should also have Ultratech Cement coming up on the screen, the pre-open session, and Bharti and Idea could be the interesting ones. And these are the 4 large newsmakers. I'll probably put in a Dr. Reddy's there. There is a very, very muted reaction in the telcos. Let's see if indeed Dr. Reddy's or some of the other banking names start moving up, because last week was terrible for banking. Let's see if the likes of Axis, SBI, even a Kotak Bank, which was under pressure in this results week, turns out trumps or no. Those would be the key market moving stocks. Bajaj Finance had a terrible last week as well, posted results, 3 or 4 days of a correction. Let's see if there is some bit of pause out there. For now, the pre-open rates pretty much suggesting nothing. The rupee should start trading in moments from now, and we'll get you the currency trades as well. Could be interesting as to what happens to the rupee coming back after a 3-day holiday of sorts. Some bit of weakening, 65.10. So hardly any kind of move that has happened in the currency today as well. But it's that time of the show when we get you the big brokerage calls for the day. And Somit, who told us about Airtel, the bull and the bear case scenario, now joins in with some of the others that have come out. I know there is a slew of reports on Ultratech, but Somit, I don't know what is on your mind.
So today we have is Macquarie has initiated coverage on the India cement sector. Now they're saying that the sector is going to see a strong volume growth, pricing power and stagnant cost over FY17 to 20, which will boost the sector. Now they're expecting the demand to grow at in the range of 5 to 8% over FY18 to FY20 against a 1% decline in FY17. Now this demand recovery is expected to coming from government's Housing for All scheme and infrastructure capital expenditure. They're expecting the cement prices to grow at a compounded annual growth rate of 4 to 5% over FY18 to FY20. Now, on the cost side, they are saying that the pressures are unlikely to rise further. So they're saying that the cost inflation would ease to around 2% CAGR over the next 3 years. Now, the pecking order is Dalmia Bharat, Shree Cement and Ultratech. For SEC and Ambuja, they have a neutral stance. Now, for Dalmia Bharat, the target price suggests a potential upside of 30%. Now, this is on the back as they're expecting the volumes and earnings of the company to grow at a compounded annual growth rate of 11% and 31% over FY17 to FY20. For Shree Cement, the target price suggests a potential upside of 26% as they're expecting the company's cement capacity to increase by 42% over the next 3 years. For Ultratech, the target price suggests a potential upside of 15%. For Ambuja, it's a neutral stance with the target price suggesting a potential upside of 8%. And for ACC, again, it's a neutral stance with the target price which suggests a potential upside of just 3%.
Wow. So by and large, people are bullish, Macquarie even more so. But I must caution people, there are equal and opposite views, HSB, and always are, of course, in a market. HSBC, of course, is not too enthused by the Ultratech results, and they've come out and said that they don't quite like the numbers. But let's wait and watch. In today's session could be an interesting session of trade because of what happened in Thursday's trade. Thursday's trade, the reaction to Ultratech numbers, pull that stock down a bit, pull the other cement stocks down quite strongly. Let's wait and watch if the Sanghis and the India Cements of the world bounce back in the session today or whether they continue to languish. That's, I think, the key point that we watch out for. But don't make too much of that 1 hour of trade. Very thin volumes tend to impact stocks in a big way in that. So let's wait and watch as to what happens in the session today for a bunch of these names. I'm told Gaurav Bisa is with us as well. Gaurav, good morning. Just a quick word on any of the cement names because they look like they'll start off on a flattish note. Is there a trade here?
Good morning. Among the cement names, there are only two names that I like at this point in time. One is Ultratech Cement. As you mentioned, it came out with quarterly set of numbers. I won't be able to comment on that, but yes, it has a good support at somewhere around 3950 or 3920 levels. So any dip in the market today, if you get it, I think that can be a good trade for somewhere around 4,150 to 4,200. That is something that can be seen. Even 4,200 can be crossed. India Cement, if it sustains 185, I think that's a wonderful stock. Either you buy above 185, that is the spot level, or you buy and dip towards 175, 176, have a small stop of 3-4 rupees, play for 10% target.
Okay, that's a fair point as well, Gaurav. Thanks for that opinion. What about some of the mid-cap names which had an active day on the Muhurat trading session as well, Gaurav? Anything that stood out for you?
Well, Muhurat trading was more so for the bears. I would say they were in the control. But if I am able to allowed to be given something that is apart from the FNO space, then one name that stands out is Gati. We have also came out with a technical report on the very same thing on Thursday's trade. It is on the verge of giving a strong breakout. 30-40% up move cannot be ruled out. So if you're talking of mid caps purely, then I think for 5-7 days there are very few mid caps that will look quite good. But if you have a horizon of say 3 months, 4 months, then one MCX that is looking quite robust. And it towards the 1,060, 1,070 can be bought with a stop loss of 1,030. On the upside, targets can be on 1,200, 1,250. So the risk was quite phenomenal. So Gati and MCS, these are two names that we have been recommending to our clients since the last 2 or 3 days.
And we'll talk about these in a bit detail as well. Stay on, Mukesh, as well as Gaurav Bisa. On to the new listing today. India's first and largest power exchange, IEX, is all set to get listed. Peculiar regulatory hurdle had forced exchange to change its anchor book allocation on the last day of its issue. Jayesh is here to tell us all about the expectations for the listing. Jayesh, what kind of listing is expected? Tepid or strong?
Very tepid listing expected from IEX. Now, IEX, India's largest power exchange that we have, it commanded a market share of about 98.5% as of last financial year. So what the IPO, if you look at the numbers that we have, so the issue price was pegged at about 1650, and that gave the issue size to be up around 1,000 crores, which represented 20% of the capital that they wanted to raise. Now, the post-issue size, as per the market, the QIP, the price that we have will be about 5,000 odd crores. Now, when you look at the subscription numbers, overall the IPO was subscribed about 2.3 times that we had. Now, the QIB portion was subscribed in excess of 2.5 times, and so was the retail portion. The non-institutional portion did not go as well. Was about only 0.85x of the total that was reserved for that. Now let's have a look at the listing scenarios that we have. The issue price was 1650, and at that price it will command a market cap of 5,000 crores. Now bear in mind that the other two exchanges that we have listed, the MCX and BSE, those also command a market cap just in excess of 5,000 crores. So this will be at par with those as well, which will be 44 times FY18 earnings as per Bloomberg Quint's calculation. Now let's say if the issue was to open at a discount at, let's say, 1,500 rupees per share. In that case, the market cap would be about 4,500, but still the PE would be close to 40 times, which is also relatively expensive as compared to the other exchanges. Now, in case of a good listing, where let's say the price would be about 1,800 rupees. In that case, the market cap would be 5,500, and the PE would be about 48 times. But the interesting bit, what happened with this IPO is, on the penultimate day, what happened was the anchor book was reallocated. Now, this was because the company understood that the FIIs would not be allowed to participate through the IPO route, and hence the reason for the anchor allocation change. So this is how it turned out to be. Earlier, the QIB section was 200 crores, which was revised to 370 crores. Now, this additional 170 crores, Neeraj, came in from the anchor allocation, which was previously 300 crores, and that was revised down to 130 crores. So that's the differential of 170 crores. So given this, Neeraj, it will be very interesting to see if this 170 crores, which was not given to the FIIs, if they decide to come and buy from the open market today, then that could lead the prices upward, and will be very interesting to watch out what happens with this.
We'll watch out for that. Thanks a lot for that. IEX CEO and MD SN Goel will also be speaking to Purva Chitnis after the listing ceremony, so stay tuned if you indeed want to know all about IEX a bit later on. Okay, however, before we move any further, I thought it's important to bring out what some of our experts had to say about stock ideas on the Muhurat trading session. If you want to bet on stocks, what are the stocks that you can bet on? Hear them out.
We have a stock under our coverage called DCM Shriram. So it's doing very well because of sugar doing well, because of chemicals doing well. So chlorovinyl prices have again come up, and the margins have gone up by 4 to 5%. So I think that another 1 year looks good for chlorovinyl, for sugar. So DCM Shriram, even from the current levels, can see a good 30-35% increase over the next 1 year. Jindal Stainless Hisar, which has been under our coverage, though the stock market cap has gone up from 1,000 crores from when we recommended to 5,000 crores now. But still, the kind of EBITDA generation and the cash generation that they have, the capacity utilization are now touching 90%, and with little bit of, little bit of balance of part, they can increase capacities by another 10%. Specialty steel is increasing there as part of the total portfolio, and they have other divisions which are doing very well. So Jindal Stainless, even from the current levels, with the kind of EBITDA generation they have, they can give you another 30-40% return over the next 1 year. And in the small cap space also, we've identified a company called Quartz Cable. So it's into CNI, control and instrumentation cables, specialty cables. So they have repeat orders from Metro. They have huge opportunity from desulfurization of power plants, from OMCs, from dedicated freight corridor, railways, and they have a good order book. So I think that stock can be a multi-bagger over the next couple of years. So being just a 135 crore market cap with a 300, 400 crores sales, they have a huge potential with sales growing at 30-40%, and even there's a huge valuation gap even at the current sales level.
The best stock to buy on a Morat day for a Diwali, at least for a North Indian, is the gambling stock we have, which is Delta Corp, right? You can't go wrong in that. We love gambling, and that's the only legal place where you can gamble in this country. So I think if there's one stock I would pick up, my people would, I guess, buy for me on this Diwali would be that stock.
Today's Sterlite Technology, which is involved in this, they are getting the maximum advantage because a lot of order position is lined up, and because they are producing raw material also, right, fiber, that's why they are in a better position.
Okay, when an 85-year-old gentleman, a veteran of the market, speaks about a stock, you stand up and listen. Mr. Kisan Ratilal Choksi's stock recommendation, amongst other stocks, was Sterlite Technologies. He believed that there is some wealth generation opportunity in Sterlite Tech over the next few years. Do watch out for that one. However, we are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. Not really over the next 1 year, but trade today. Indiabulls Housing Finance, Havells, Hindustan Zinc, Graphite India and NOSIL will be reporting their Q2 numbers today. Watch out for Dr. Reddy's. There is a favorable verdict for the company in the Novartis patent ruling case. Morgan Stanley sees $120 million sales from the drug once it gets the approval. Indian Energy Exchange to list on the exchanges today with an issue price of 1650 per share. Issue was subscribed about 2.3 times. Hero MotoCorp sells over 3 lakh units on Dhanteras, while Heavy Industries Ministry takes stock of BHEL's performance. Couple of stocks that should be on your radar today. Macquarie's initiated coverage on Dalmia Bharat with an upside of 30% and on Shree Cement with an upside of 26%. And on cement upgrades, CLSA upgrades Ultratech to a buy, while Equirus Securities initiates coverage on Sterlite Technologies with the target of 300. Well, a couple of minutes left for the markets to start. Let's get in the top trading recommendations from our experts. First, Mukesh, if you had to bet on one stock for the day, which one would that be?
I will go with this Motherson Sumi. If it starts trading up 358, then I think there is definitely a trade over there. I will go with this Motherson Sumi.
Okay, so Motherson Sumi trading call for the day today. It's a long call, right, Mukesh?
Yeah, it's a buy about 358. Stock would be 349, and on the higher side, I am expecting a move towards 374, 75.
Okay, so buy call on Motherson Sumi above 358. That's the top call from Mukesh Singh. What about Gaurav, your top call for the morning?
My recommendation would be to buy PFC Power Finance. It's been given a good breakout, 130 call option, very high consolidation, close above those levels. Can expect 138 to 140 levels, stop loss of 126, half 127.
Okay, and I think Gaurav has been bullish on Power Finance for a while now. So do watch out for these two names. Motherson Sumi and Power Finance Corporation remain the top calls from our experts today. Mukesh Singh as well as Gaurav Bisa. Gentlemen, thanks a lot for joining us today and giving us your stock recommendations. Gaurav, really appreciate you joining us at the last moment. Thanks for taking the time out. Okay, 30 seconds for the markets to start. Remember, a bunch of stocks will be in focus. Large caps predominantly. A lot of mid caps will fly around and we'll talk about those. But in terms of the large cap movers, I think we'll watch out for Reliance Industries and the telcos. We'll watch out for Ultratech Cement. We'll watch out for Dr. Reddy's. It's not really shown the sparkle in the pre-open rates. Let's wait and watch if indeed there is some more upside over the course of the trading day today. So those are 3 or 4 names in the large cap pocket that we'll watch out for. And the mid caps, really, a bunch of names. Do watch out for Sterlite Technologies. That's found a lot of favor from experts. But these are the rates the day after the Diwali holiday, Monday morning. 10,165, about 20 points higher for the Nifty. Actually fairly muted compared to what the SGX was probably indicating. The Sensex about 61 odd points, but the Nifty Bank refuses to participate. I think this has been the key culprit for the last few sessions and in today's session as well. It's just not participating. Let's wait and watch if the Nifty Bank can really participate in the session today for the index to move up, but about 0.25% higher. The broader end of the spectrum, again, 0.25%. The small cap index, 1/3%. So yeah, just about a flattish market breadth, I would presume. Let's pull up the Nifty heat map and show you what's moving and what's not. Not too many losers, save for Bajaj Auto, and I think the Sri Lankan ban really leading to that sentimental downtick on Bajaj Auto. On the other side, Ultratech and Hero MotoCorp amongst the top performers in the session today. So 3 or 4 names out there. Pharma is seeing a good start to the trading day today, and HUL, despite Unilever's commentary about volume growth, is marginally higher. So let's pull up some stocks here before we try and tell you about the newsmakers. I want to mark Dr. Reddy's, Cipla, and Aurobindo, 3 pharma names which are starting off on a really good note. So Nifty Pharma might be having a bit of a leg up in the session today. I don't know if Dr. Reddy's sentimental impact has got to do with it, but all the pharma names are doing reasonably okay for themselves. And I want to mark Bajaj Auto and Hero MotoCorp out here. Bajaj Auto, with that ban, is starting off about 1% lower. Hero MotoCorp, on account of that fabulous sales in Dhanteras, is starting off 2% higher, 3804 and counting. Really good show put up by Hero MotoCorp in the session today. What about the newsmakers in the session today? I think telcos, led by Reliance price hike. Let's see if indeed there is a reaction that we're seeing. Marginal, actually no, not marginal, quite frankly. In case of Idea Cellular, another 2.5% today. But Bharti Airtel, Reliance Jio, all, and Reliance Industries, yes, but predominantly Idea Cellular. This is that big mover in the session today. Starting off on a really, really positive note is Idea Cellular. What about some of the others? Dr. Reddy's, as I said, moving up about 1.5% higher. The patent approval coming to its rescue. And Hero MotoCorp, as we said, the Dhanteras bonanza are really, really working for the counter. What else? Brokerages have been bullish on Ultratech Cement. No surprise there. By and large, people have given a constructive view. So it's recouping all of the losses that we had for Ultratech Cement in the session, on the Murat trading session, and starting off well. And an anti-dumping probe on the resin, which is manufactured by Gujarat Fluorochem by the US. Not reacting too much as of now. Let's see if indeed there is more in store for Ultratech Cement, or rather for Gujarat Fluorochem. And a clutch of mid-caps, we'll get to them, but let's get in the bid market voice of the day on the show immediately. Andrew Holland of Avendes joins us right now on the show. Andrew, good having you. Thanks so much for joining in, and best wishes for a new year from all of us out here at Bloomberg Quint.
Yes, Happy New Year to you and all your viewers too.
Thanks a lot for that, Andrew. Will it turn out to be a Happy New Year, Andrew? Because I was looking at what you've given us in terms of your thoughts, and you do believe that if indeed there is a correction which comes in and ensues, we could see levels which are almost 10% lower than where we are currently.
Yeah, that's really of the global factors. You know, we're sitting in, as we have been now for some time, liquidity-driven markets, not just in India but globally. And you try and work out and think about what will burst that bubble. And in the past, nothing has really kind of burst it. It's been temporary kind of falls, and the buy and dip strategy has worked very well. But as we come towards a tightening in the US, not just through interest rates but also through the balance sheet tightening, then I just wonder, how the bond markets will react to that, if there could be any kind of, turmoil in the bond markets, which we haven't seen. If that was the case, then obviously, you'd see a lot of money which is going to come into emerging markets, bond markets, being quickly taken away, and that exacerbates kind of currency depreciation, and that could throw a few wobbles for the equity markets as well. So that's really, the biggest concern in the short term. But, longer term, we stick to our view that both globally and locally, we remain, very positive about the kind of mid to longer term. But the shorter term, liquidity-driven markets do throw up nasty surprises. And whilst we haven't seen any yet, as markets keep kind of climbing higher, the risk becomes a lot more kind of severe on the downside.
By the way, because of that whole talk of various companies eyeing Bhushan Steel, that stock is on a bit of a roll today. It's starting off on a big note, so watch out for Bhushan Steel. Watch out for GVK Power and Infra. That stock is starting off about another 5% higher. I think there's mentions about Equity Intelligence recommending it as one of the top ideas. I think the last 5 or 6 sessions, GVK Power has been on a roll, on an upper circuit for the last 5 days. So good going for that one. And then a clutch of names. But I think that one pocket that stood out for me is Telecom. And Andrew, I'm jumping straight to some of the newsmakers before we talk about the broad macro as well. I have a couple of questions there. But Telecom, I mean, what's happening? Just when we thought that the price wars could get a bit ugly, Reliance Jio ups the tariffs. It probably gives, at least the market believes, the incumbents some leeway to increase prices as well. But more importantly, this whole consolidation now leading to a three-player market and people believing that, hey, could this be a start of pricing power returning back to a very small player participated industry? What are your thoughts on telcos?
Well, I think you've actually summarised it very well in terms of where the market's kind of now thinking more positively. Our view was that Reliance probably had another opportunity to squeeze a little bit harder, but they decided that that's not what they want to do. So you're right, it gives a little bit of pricing power, it gives a little bit of kind of lull, but I wouldn't be surprised if Reliance don't come back and just tweak their aggressiveness again, just to take some more market share. So whilst we've become less negative on the telecom sector because it has been going through its pain for over 3 years now, I think the initial part of the rally was on accounting differences between, say, a Bharti and a Reliance, and if you kind of put the same accounting norms there, which I'm not sure I would be so fundamentally kind of approving of, but it's worked for the sector. The sector's been under-owned, unloved, and you've seen these bounce back. But it's going to take some time for this consolidation to work through, and I still think there's. I wouldn't be chasing at these levels. I think it's had a reasonable run, and I think there's probably better sectors to look where you can see the earnings visibility a lot higher without some very aggressive player who's trying to get his market share.
What about upstream? I'm using Reliance both as telco and then an oil and gas player, because I clearly see that your revised crude target is $70 a barrel. If anything, a bunch of sell side names have started turning bullish on some of the upstream names like ONGC and a few others too. What gives you this bullishness on crude? But two, more importantly, what about upstream? I would probably even add the downstream and the oil marketing companies here.
So when we first started the Avendus Absolute Return Fund in our kind of newsletter in March, we said that when the oil price was around 40-45, that if our expectations of global growth was to come off, then we start to see the oil price move towards the 60 level, which it has. And as we go into 2018, that supply demand anyway for oil is kind of nearing, kind of being equal. And if you get the expected kind of push in the US through fiscal spending because of the hurricanes and the tax cuts, which look likely to go through, then this will get an extra fillip to global growth. So it'll start in the US, Europe we're seeing quite strong, and then obviously Japan will be the next country to kind of see that pickup. So that will increase the demand for oil, and obviously with China and India growing at 6 to 7% each, again the increase for oil will be a welcome news for the producers. So we think the oil price can move towards 70 over the next 6 to 9 months, and obviously that would be great for the oil companies in India, including the names that you mentioned.
Okay, Adani Ports is amongst the top gainers. I think promoters have been buying aggressively from the open market the last 2 or 3 months. I've heard 3 instances of that. So that is doing okay. And Ultratech Cement is participating a couple of percentage points higher in the session today. Cement, Andrew, in the recent few years, with the kind of valuations that we are trading at, this is probably the first post-monsoon season wherein I'm seeing the street by and large having a consensus bull call on cement, never mind the fact that valuations are hard. I think one of the key reasons that came out in the sell side notes today was that capacity addition is not that strong. One, what is your position out here? And two, why is it that the view that you have on cement?
So it's a very simple story that you're right. There's no new capacity. There's probably a little bit of M&A within the sector, which will obviously kind of boost prices in terms of valuations, and they all have pricing power. And you know, notwithstanding the problems they've had in the past of you know, kind of acting as a cartel, you know, they will continue to push prices higher, or try to push prices higher. And particularly when we go into 2018, when we start to see the economy start to pick up from the GST and DMON kind of you know, short-term kind of problems, you know, this will be a great fillip for them. My only worry is about input costs, because obviously, you know, we have seen petcoke prices rising, and that could be something which we'd have to look at a little bit closer. But you know, the good news for this industry is that they have, you know, they have capacity utilization which is running very high, and they have pricing power. So you know, that will continue to push earnings higher going forward. So you know, it's a sector which people like because it's not really affected so much by the GST regime, but more because, you know, the government spending on things like housing and roads and everything else in infrastructure. So that's helping you know, keep the momentum for these cement companies.
Okay, I see that you are overweight automobiles. I'm not surprised here, but I'm just trying to figure out where within this whole basket are you bullish on. I mean, if Hero MotoCorp can sell 3 lakh units on Dhanteras, you can't not be bullish.
No, and it's very selective, obviously. You know, you got to look within the, say, the two-wheelers of which companies you feel are you know, going to continue to do well, and Hero have shown that in terms of their figures. In terms of the four-wheelers, you know, obviously Maruti continues to do well, and obviously with a weakening rupee, so a weakening yen against the rupee, that's obviously good news for them as well in terms of input costs. So, you know, you have within the two-wheelers and four-wheelers quite two dominant names which are doing very well. And then you can say, okay, is you know, who do I need to be on the truck side in terms of heavy commercial vehicles, and you know, see you know, how you need to position for that pickup there. And obviously there's a very limited number of stocks which you can buy. So that's why the sector, you've got to be very selective, because there will be, you know, those companies which are, you know, are doing okay, but it's all priced in. And I think, you know, that's my concern, is that, you know, if things do slow down at any time, then you've got to have the catalyst to increase market share, and there's not that many that can do that at the moment.
Interesting. Andrew, you've been associated with a reasonably large sell-side name in the past as well. You understand this whole business so well. I'm talking about the diversified financial players. You know, what's your sense? I mean, do you believe, and considering the fact that now we also have an AMC IPO coming up in the next 3 or 4 odd sessions, what's your sense of the quantum of upside that remains in these players? I know they are multi-year stories, the brokerage stroke diversified financial names stroke AMC players, but is it possible for people to make a fresh investment into these players and still make big money over the course of the next few years?
It's a good question. You know, it's not a sector. I mean, that brokerage sector is not a sector which we actively follow. So it's difficult for me to say what the fundamentals are. But you know, let me put it slightly differently. You know, we think, you know, over the next 4 to 5 years will be a $4 to $5 trillion economy. Now, if that's the case, then financial services will have to play a big part in that. We're playing it at the moment through 2 parts. One is you know, the private banks, you know, the ones with the ability to continue to take market share, and through affordable housing, where we feel that, you know, that will be a big sector going forward. So you've got to be, you know, where you feel, you know, that the market's going to be. And I think, you know, we'd say the insurance sector, that's, you know, obviously kind of emerged with all the IPOs. We think those have been very, you know, richly priced. And with the, you know, and what we've seen is really lackluster performance thereafter. So we're not gung-ho on everything, but we think the financial sector, you know, if you're going to have that, you know, size of an economy, this is going to be a very big sector going forward. We're playing it in 2 different ways at the moment.
Okay, Andrew, before we wrap up, a whole host of contra calls, whole host of overweight calls as well. What is that one big theme that you guys are bullish on from this somewhat onto maybe the next somewhat or the next 18 or 24 odd months? That one large call.
It's difficult for me to give individual stock names,
of course,
but I will say that, if I look at FMCG, if I look at FMCG, I think the theme that I would look at within the FMCG sector is that, you had three stocks which are under, the radar from a global perspective. So if you look at Unilever, you had Kraft, which was, obviously made a hostile takeover. They're sitting in the wings, so Unilever themselves have to get their act together at a global level. Nestle has a large hedge fund activist, sat there and now making them kind of have sales and profit forecasts going forward, which they've never done in the past. And Colgate's in the same camp. So you've got three multinationals from a global perspective that have to really kind of perform better, or there's people waiting in the wings that will do something about it. And obviously that will have a positive impact on the local companies in India who themselves will benefit greatly from GST. So I think you've got a lot of tailwinds for the FMCG sector, particularly on the multinational companies.
Fair call, Andrew. We leave it at that. Thanks so much for taking the time out and have a great week ahead.
Pleasure.
That's Andrew Holland of Avendus. Just looking at the markets before we slip into that break, on the larger stocks, the Nifty 200, Indian Hotels is that big mover up 3.5%. But telcos ruling the roost, Idea about 3.5% higher, slightly off from the highs of the day, but still doing well. Bharti Airtel about a couple of percentage points higher as well. So that is that one basket which is doing well. And the Adani Group, by virtue of this promoter buying in from the open market, both Adani Ports and Adani Enterprises are doing rather well for themselves. So good going there. JSW Steel about a couple of percentage points higher. Bhushan Steel, of course, company-specific news or rumored news. And that stock is top of the pie when it comes to the Nifty 500, up about 12% in the session today. Slip into a quick break, but up next we discuss Diwali sales. That's that big talking point. Vinkesh Gulati of United Automobiles joins in to talk about that, and a bit later on a couple of corporate voices including Sandur Manganese on the whole electric vehicle push.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people. You're watching Indian Open. It's turned out to be a great Dhanteras for Hero MotoCorp, with the country's largest two-wheeler maker claiming that it sold 3 lakh bikes and scooters on that one day alone. But car makers need not necessarily have shared the same sentiment, with sales remaining flat for most four-wheeler companies, particularly on that day, or that is the anecdotal evidence. So is Hero MotoCorp one of the very few beneficiaries of Dhanteras, or was the cheer widespread? Joining us to talk about auto sales this festival season is Vinkesh Gulati, Secretary of the Federation of Auto Dealers Association, or FADA as it's more popularly known, one of the key officials at United Automobiles, which is a Mahindra & Mahindra dealership. Vinkesh, thanks very much for joining us here on Bloomberg Quint. Let me start by asking you what you thought festival sales look like across the board, two-wheelers, four-wheelers. Was this year a substantial improvement over last year?
No, I cannot say like that, because the two-wheelers still had a good time, but four-wheelers were not there. And the expectation was too huge, seeing the growth in and the message which we get from the wholesale numbers which Sam gives, that they are growing by 13% in August and 11.32 in September. But the market didn't react like that. And the Dhanteras was in some places good, like in UP and Bihar it was good. East also did something good, but the rest of the country merely shared the same figures what they had last year, or a bit lower.
What do you think, Vinkesh, explains this difference in customer response to two-wheelers and four-wheelers? Could it be that the two-wheeler companies, especially Hero, which is boasting of a record sales number, did some more aggressive selling, more aggressive discounting? Was it that could have made the difference? Or is it just smaller budgets that consumers have to spend?
So, the discounts really made that effect, but it affected only some sectors. Like if you see, Hyundai gave a big scheme. Even the other product like Honda, there were schemes from 15,000 to a lakh on four-wheelers, but it didn't give that required effect what Hero could get from a scheme and could sell 3 lakh vehicles on that day. So two-wheelers were still buoyant because of some of the rural sale coming back. But on the four-wheeler front, because of, I'll not blame it directly on the GST, but yes, because of the GST, the SME segment is in a bad shape. They are not still able to revive. And small businessmen are postponing their bigger purchase still because of the funds issue and the management issue of the taxes. So two-wheeler was good, but four-wheeler was affected. The schemes were similar. These were the best schemes in a year what we have in the market.
Sir, just a quick question. Are a larger percentage of the purchases across the industry now coming on financing schemes as well, sir?
It was always there. The finance market has grown up to now. In two-wheelers, it's still around 60-70, and in four-wheeler, it's around 80-85% plus. So finance schemes were there, but now the finance schemes doesn't give that much benefit, because all the players have reduced their rates, and now talking of that high rates of 20% or 18% IRR is not in the market. You can easily get loan at 9.5 to 11 from any bank, or even an NBFC if you have a good CIBIL score. So finance scheme does help in two-wheeler, where Bajaj Auto Finance did some 0%, or you can say no interest for an year or two schemes. It does help in two-wheeler, but not in four-wheeler. Four-wheeler, the economy, the market, the situation of overall country affects the sale.
I was actually asking about two-wheelers only, sir. I mean, would the proportion of sales on finance this season over last season have been higher? Just trying to judge whether, cash demand is relatively lower than last year, and what is making up is the financing schemes.
It's similar. It's around 2 or 5% above. That is it. Not very high. It is more because now all the two-wheeler companies are coming up with their finance companies. So it's being easier to get finance in two-wheeler as before. Before there was only Hero and Bajaj which had their finance companies. Now TVS and everybody is tied up or have their in-house finance company to that. So it does benefit. The conversion are fast, so the dealers are trying to push customers for finance. And no doubt there has been cash limitation as compared to last year, but that hasn't affected so much.
Did you notice this two-wheeler cheer go beyond Hero and also help Bajaj Auto sales, TVS sales, Honda sales in the two-wheeler category? Or was it almost all concentrated on Hero? And do you think that could have been, again, because of the kind of schemes they offered this festival season?
See, Hero used this as a big PR thing, and no doubt Hero got the biggest benefit, but Honda has also done good. Honda, if I talk about Activa, they were out of stock on all the counters by, I see, around noon or maybe 2 o'clock at out the counters. So they didn't have the stocks for the Activa because the sales were already going good. TVS also did good. Bajaj was a bit normal. I'll not say Bajaj got the benefit of the two-wheeler sale. They weren't that great. But after Hero, Honda also benefited. TVS did also. So it's an overall two-wheeler benefit.
Okay, a couple of questions on four-wheeler companies specific. One is Maruti. Last month sales for Maruti, well, if at all, got impacted because they had capacity constraints. How has the festive season been for Maruti? Above estimates, or would you say they've done things at par?
No, they were at par, and at some dealership or some location they were above estimates because they were already short on stocks for the past many months, as you know better than me. So, but it benefited because there were other products which weren't moving that great, they also moved. So they were able to cash on that shortage thing and the Dhanteras hype and convert all their even slow moving inventory into sales. So Maruti did benefit, but not as such because the capacity issue of Maruti is very evident, which was a problem.
And while you would have pulse of the industry and large, Mahindra and Mahindra, you would have a close eye on what they've done. How has it been? One, the SUV market for Mahindra and Mahindra, and two, how has the festive season been for tractor sales, for M&M in particular?
So tractor sales were good. They are really, last month they've done what the best ever, and this month also the tractor sales have been good. But on the auto sector, it's a mixed bag all India. Like I said, the east and in north, the UP and Bihar did wonders. But if I talk about Rajasthan, Haryana, or maybe south, they were just normal. They were equivalent to what they did the last Dhanteras or the last Diwali period. So overall, maybe they'll be reporting the similar numbers or a bit tad lower, I feel.
Vikesh, what's the outlook on demand here onwards for both two-wheelers and four-wheelers? You mentioned, and you've been saying this all through the interview, that there has been a resurgence in rural demand, but urban has been muted. Is that what you expect in the weeks and months to come? Do you expect any shifts in that at all? And how do you think that the manufacturers will calibrate their manufacturing positions in response to what you're reading into the market?
The festive season has gone by, but the marriage season is coming. And some of these states, the marriage season is also big. So I don't see any problem. The demands will be there. Two-wheeler will still go up. Four-wheeler will also have the benefit of the marriage season. And then for the four-wheeler, if you remember, the December sale is always very high. So I'm expecting in November, marriage season will help us. And then in December, the December schemes or the year-end schemes, what you know, will benefit. So no, I don't find any manufacturer reducing their inventory or their production units. They'll always be improving that and trying to sell more, because that is the way how OEMs do.
And in four-wheelers, you expect, across the board or uniform kind of response to most of the manufacturers and brands? Or do you think that right now indications are that some will stand out in the next few months?
So obviously, Maruti will stand out. They are the leaders. So Mahindra will also improve, I'm expecting. But the likes of Nissan, Volkswagen, Honda and Hyundai, I see tough times ahead. Toyota obviously is improving a lot lately because their stocks are there in the market. So it's a mixed bag. But majorly Toyota, Maruti and Mahindra will improve more.
All right, Venkesh, thanks very much for joining us this morning. That's some insight into what went on in festival season for auto companies, both two-wheelers and four-wheelers. Very straight thought, quick one before you move on to the next interview, and that is, remember in GST we spoke so much about how manufacturing states will hurt more than consuming states because of the change in the tax. And the demand spread that he was talking about geographically, which is the north states, the east states, which are typically the more consuming states, versus the western states, which are typically the more manufacturing states. So he said demand was higher in the north than in the west, and the west seems to still be struggling because of the GST impact. Very straight thought. I'm just sort of juxtaposing the two together to say this is part of maybe what we had anticipated would play out. But like I said, it's a straight thought. Anyways, let's move on.
Yeah, well, let's move on and talk about, well, something related to vehicles, because manganese is used extensively to make batteries, and the government's thrust on electric vehicles are only expected to drive the demand for the metal. At least that's the belief. One of the companies that will probably stand to gain from this potential spike in demand is Sandur Manganese. Joining us on the phone line to talk about that and some more from Bengaluru is the commercial director of the company, UR Acharya. Good having you, Mr. Acharya. Thanks for joining in.
Good morning.
Good morning and festive greetings to you and your team. What's the demand situation slated to be like, Mr. Acharya? People believe that electric vehicles will meet more demand for manganese, and therefore the next few years will be great for manganese and companies in that space. Is that a correct assumption?
I'm afraid may not be, because our manganese, what we make is manganese ore. We are extracting the manganese ore, and this manganese ore is used in making ferroalloys. Ferroalloys are again used in the steel making, but of course that particular steel is used in automobile. Manganese imparts some greater strength to the steel. So the automobile steel definitely drives the demand for manganese. Whereas the manganese, higher grade of manganese ore, which is in a very small percentage, are used in dry cell. That may not drive the demand so much as the demand for the body of the automobiles. So we are basically in the steel-related industry.
Okay. So how would demand, I mean, aside of electric vehicles really, that was probably one crutch.
Yeah,
but
the demand is growing in India because we have almost the entire Indian steel is expected to grow. When the steel demand goes up, also the demand for ferroalloys, particularly the manganese-based ferroalloys, grows up. So India is embarking upon producing steel up to 300 million tons, which is from the current level of 100. Although this will take time, definitely year to year we see a higher demand for the ferroalloys and manganese ore.
Can you put some numbers there, Mr. Acharya?
Pardon me?
Can you put some numbers there, YOY? What's the quantum of demand uptick that you foresee?
We expect at least about 20% increase in demand this year.
Wow. Okay. 20% increase in demand.
We bake basically manganese ore, whereas India producing ferroalloys, and the ferroalloys, the demand is much higher. It's about 3 million tons of ore is required, whereas India is able to make only about 1/3 to half the demand is being met, and the rest of the manganese ore is imported.
Okay.
So with the combination of imported manganese ore and the Indian manganese ore, we are making ferroalloys, which are in turn used in the automobile sector steel.
Okay. One last question, Mr. Acharya, and that's on, the reason why a bunch of brokerages could be bullish on your space as well. It's showing in the stock price performance too. What's the revenue growth that a company like Sandur Manganese could have, say, in the current year, if you can leave us with some estimates, as also over the course of the next 2 or 3 years?
Because we are expecting some judgments to come during this week from the Supreme Court, and we are quite optimistic about that. If that happens, we expect about 20% growth in the revenue.
For FY18?
Yes, FY18.
If the judgment were not to come...
Artificial cap on the production of the manganese ore. Supreme Court has imposed a cap.
Yes.
They are likely to review this based on a scientific intergenerational equity and environment concerns. If that happens, we are likely to see at least 20% growth in the revenue.
If that
will allow us to produce more.
Okay. If that were not to happen, Mr. Acharya, then you would probably still have about 15% growth?
Yeah, we will be able to maintain last year.
Which is about what, 15%?
No, last year we did only about 400 crores turnover. It will be in that range.
Okay. Fair call. Great having you, Mr. Acharya. Thanks so much for taking the time out and joining us and giving us that perspective. Sandur Manganese, the stock is up 7%. But a couple of things that stood out. One, that the management saying that this whole talk of electric vehicles and therefore companies or manganese really getting a big boost might not really be factually correct. It will go for car bodies, not so much for batteries in that sense. But companies like Sandur Manganese, maybe MOL and some of the others, could well be benefiting out of a possible Supreme Court ruling, which is slated to come out this week. Based on a scientific formula, the Supreme Court may allow these companies to mine a bit more than the cap which has been laid as of now. If indeed the cap goes away or the cap gets reduced a bit, then companies like Sandur Manganese and some of the others could actually show about a 20% revenue growth in the current fiscal, is what the management had to say. 7.5 or 8% up in the session today, I would presume, in expectation of some favorable court rulings, because otherwise the revenue growth may not be as high as what the market probably believes. So that's the word on Sandur Manganese, guys.
We're waiting for our next guest to join us.
Yes.
Quick check on how markets are doing this morning. I think fairly sort of meagerly in the green, and the Bank Nifty completely flat, right?
Yeah. So
it's the Axis Bank effect.
Yes. So unless the Nifty Bank really I'm sounding like a broken
Still
record. I know.
Bank Nifty. I'll never get used to Nifty Bank.
Nifty Bank. I know. It becomes difficult at times to speak about it that way. But 3 banking results this week. So let's see if that has an impact on Nifty Bank. But just looking at stocks which are moving around in the session today, telcos, guys, up in the green. Shriram Transport up in the green, up about 4%. And ever since this talk of this reworking of the deal has come about, Shriram Transport has seen a number of days wherein we've had these 2-3% kind of gains coming in. But interestingly, it is telecom and to an extent cement counters. Ultratech, for example, up about a couple of percentage points. So
IT is doing well. If you look at it from an index point of view, IT is doing well, FMCG is doing all right. Auto's not doing very well this morning, from an index point of view. And of course, the Nifty Bank is having a flat day. So
yeah, but must point out, Menka, Ira, one thing, Infosys tomorrow, after a really long time, results coming out post-market hours. They're doing the whole...
First marks the first month of Nandan Nilekani at the helm.
Yes.
As chairman, though, to point out very clearly. So he did say that, I'm here, but I will not be presenting the earnings. I think that Praveen will present because that's the operational team, so to speak. But it will still be the first quarter under Nandan, right? The first quarter under Nandan.
And and the first quarter in a really long time, as I said, not coming out at 9:30 a.m. or 10 a.m. So we'll not have the.
They've moved in between to the afternoon, and then they've done a lot of experimentation on earnings.
It's been during market hours still. I don't remember for the longest time Infosys doing it at 4 p.m. So that's the big deviation. Let's wait.
Well, interesting. Okay.
But cement, Ida.
Yes, we're getting back to cement, the theme that Neeraj had highlighted earlier in the show. A bunch of factors at play. One, of course, the earnings have met street expectations, but as Neeraj pointed out, there's some cost factors that are coming to play with increasing input costs. On the other hand, cement from a capacity standpoint is in a good place because the lack of capacity addition over the last few years means that there is potential upside. Dhananjay Sinha is joining us. He's head of research at MK Global Financial Services. Good morning, Mr. Sinha. Thanks so much for joining us. We'll get into the finer print of, cement earnings, etc. Neeraj will do that. But from a big picture standpoint, cement is in a good spot, right? I mean, we had years of, capacity addition being at a standstill. Now you're starting to see demand pick up because of affordable housing, etc., although not from infrastructure. So cement companies should be well placed at this stage.
Yeah, I think that expectation is there. I think the incremental addition to capacities over the past few years has been coming off, and the aspect is whether the demand conditions improve or not. So we have seen, as far as real estate is concerned, there has been a sort of a flat. In fact, there has been a very little growth that has happened from a real estate standpoint. So I think the considerable amount of dependency is on what the government does with respect to infrastructure projects, housing for all, affordable housing, etc. All these themes have been talked about, and this theme was also relevant in the last year but we had seen that really not really materializing, given the context that you had demonetization and the lingering impact of that over time. So the whole expectation now is that as in the run-up to the next election, the government would actually re-emphasize that more allocation would happen. So I think that's a hope thing that keeps on ensuring that there is a certain amount of pricing power that'll come back in the sector. So that's something that we'll need to watch. On the other side, it is important also to realize that a considerable amount of such initiatives will be implemented at the state levels, and given the context that you have certain burden that has come by way of farm loan waiver at the state level, there might be certain compromise that can happen. Also at the central government level, you don't know exactly how much fiscal deficit will expand and what will be the impact of GST implementation on tax revenue, etc. So I think there are certain risk factors that are there both at the central and the state government level. But nevertheless, the hope is that the government would actually re-emphasize or materialize the expectation that one has with respect to infrastructure spending and this whole housing for all thing.
No, I get the point that macro risk for cement always exists, but my point was more industry specific. If I remember correctly, sir, the capacity utilization numbers in cement are ahead of what the overall industry average is, which is around 72 odd %. Is capacity utilization at a point where the investment cycle in cement is going to start turning, sir?
No, I don't really see that. I think in the next 2 years, I don't see that really happening. So I think there has been certain consolidation that has happened. For instance, JP plants have been acquired by Ultratech, and there is a certain amount of utilization that has been happening. So I think at this juncture, we are seeing a few consolidation that has happened, and there will be ramp up of utilization that would happen. So I would say that it will still take few years before people start getting into an expansionary mode. So I think unless you have a full-fledged housing sector revival, when you actually see utilization levels sustaining at such levels that one has to really add capacities. And important thing is that at this juncture also we haven't seen the pricing power really coming back to the producers. So I think there will be a certain phase that needs to get over before companies start to think about expanding capacity. In the interim, there will be consolidation and ramp up, all those things will happen.
So, Dhananjay, where does the market bet on? Regional players or pan-India players? What is MK as a house bullish, bearish, neutral on?
So I think as far as the cement sector is concerned, if you look at the results, I think we'll have to really look at companies which can actually expand their sales through on the back of all these housing for all and other infrastructure spending that will happen. So we'll have to see which are those companies which can actually do that. If you look at the quarterly results, we have seen that Ultratech and ACC have actually done very well. They have met expectation with a volume growth of something like 17.6% for ACC and Ultratech somewhere around 17.5%. ACC, for instance, has done well on the back of the fact that you had a 10% decline in the last quarter in terms of volume growth. Ultratech, I think some ramp up that has happened with respect to the JP associate plant acquisition that has happened. Organic growth is somewhere around 2 to 4%. So I think that is the scenario that one has to look at, and we'll have to see how the cost pans out. So I'm saying that one has to be, one cannot be significantly bullish on the sector, and we'll have to see whether what the government has promised really translates, and we'll have to see another few quarters, 1 or 2 quarters before we take a very decisive call on that. So I think that is a very critical thing we'll have to really look at from a cement sector standpoint.
Okay, Dhananjay, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. And festive greetings to all of you at MK. from Bloomberg Quint. Okay, a new kid on the block. Just before we wrap up today's show, IEX about
10,
to list. 9, remember, 8, there could be some FI participation that could come in because of the anchor book allocation changes that happened on the last day. So let's wait and watch for that. But expect the listing to be tepid. 1650 was the price. It's opened down about 7%. Not surprised there. Let's just see if there is some bit of buying that comes in at the lower levels for this one. But for now, the listing not the best.
Were keen or hopeful that because the foreign guys were not able to invest in the IPO route, that they will invest now in the secondary market route.
Yeah, let's see if that happens. So I must say, not the best of times for the exchanges at all, except for BSE. MCX hasn't set the stage on fire. This is the first power exchange. The listing has been anything but good, 5.5% lower. Let's see if that improves or no. But we call it a day on this leg of Indian Open at least. The FNO.
You want to greet us, festival greetings?
I already did that at the start of the show.
When is the appropriate time to stop saying Happy Diwali?
After Diwali.
After Diwali. Yeah, but
All
the
right.
big question is, what's the appropriate time to stop saying Happy New Year? Because this is a new year. Saal Mubarak.
Oh dear God, we have serious issues to ponder over. You go watch the FNO show. That's it on Indian Open. Thanks for watching.